please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Andrew Holland, CEO of Avendus Capital Alternate Strategies, is with us. Andrew, good morning. I think this is a time that you can say, I told you so. I mean, whenever we have had discussions, you said this NBFCs and this couple of finance companies you would never touch. But your thoughts on what's going on right now?
I think there's obviously a lot of scare and there's a lot of rumours going around. And, you know, on the one side, and I'll ask Latta the question as well, is I don't remember the RBI and SEBI putting out a joint statement before, but I could well be wrong. So on the good side, you can say, well, that calm the markets. On my more sceptical kind of viewpoint, it tells me maybe these things are a little worse than we're thinking for them to make such a joint statement. I think the problem is probably within the mutual funds in terms of where the selling might have to be here if they're getting more and more redemption. So I'm not saying underlying is something wrong with the NBFCs, but obviously they're going to get hit. And because of all the different rumours of what's unfolding around us, until there's any kind of clarity, in terms of the selling or where the mutual funds are, I think it's just going to be counter rumour. Some on the good side, some mostly on the bad side. So I think it's just a sector you just have to steer clear of at the moment, wait till the dust settles as usual, and see where the bargains are.
Would the bargains come in some of the... Okay, good morning, Andrew. The Reserve Bank and the regulators have made these noises in 2013 and 2008. So in a moment of extreme scare, you expect them to say something or do something, and that sometimes helps. We'll have to wait and see if this ruse works and it prevents people from going and seeking redemptions in mutual funds. I assume that that's what they were trying to do. But be that as it may, would you want to at some point look at good bargains in the NBFC space? I mean, companies like, say, Bajaj Finance, who have always been managed to finance themselves with the rights issue and then come up looking brilliant, or Sundaram Finance, simply because of the risk aversion, are they actually likely to get money cheaper?
So I think there's a few things there. Is that unfortunately they'll all get tarred with the same brush in the initial kind of sell-off. So it depends on what price they fall down to. But the quality NBFCs is definitely where we'll be looking at for our kind of entry points. If they actually hit them, but obviously that's going to be quite a large kind of downward shift because they're all pretty highly rated, as you're well aware, albeit some have come off a lot more. So it's not a sector to rush in because valuations have become so attractive at the moment. So unfortunately we just have to sit there because the rumours are too much and you get whipsawed too as we saw on Friday. So just sit back and watch a little bit. And see what entry points you want to go in. But those are, the quality NBFCs are the ones where we'll be focusing our minds in terms of what the entry points are.
Okay. Andrew, hi, good morning. So you said that NBFCs is not a sector to rush into, but what about investors who already have a decent exposure into this space? I mean, there are now talks that some of the housing finance companies are facing liquidity issues. They've defaulted on their scheduled payments. We've not heard of any of that, but of course, there is a lot of rumor mongering going on. How do you, as an investor who perhaps holds some of these even good quality names, how do you tackle these noises?
So you don't. You just let the noise go on until you feel. I mean, you obviously have identified. You'll speak to the management of each of the NBFCs or housing finance companies which you think are quality. Make sure that liquidity issues are not for them. They'll be tarred with the same brush. That's fine. And again, you go back to your entry point. So sometimes it gives you the opportunity to pick up your quality again, but. When you've just said it's all about rumours at the moment. So when the market's like that, you just better just sit on the sidelines and then have your fundamental companies ready to buy if they hit your target prices.
Okay. By the way, look at Bajaj Finance now.
Exactly,
almost 5% lower on Bajaj Finance. So when you have Bajaj Finance down about 4.5%. you know, smacking of
Why
some
talk
serious
about
problem in
others?
the NBFC space. So the other NBFC rally always will remain vulnerable. There are a lot of stocks which are seeing, of course, intraday bounces. But anyway, let's see how things move from here. And to the other talking point has been Yes Bank. Your thoughts on this issue, and whether, I mean, if you want to comment on whether as a stock it's now attractive.
Again, without talking on the stock individually, I think you know, the fact is this, is that we don't know any of the reasons why it happened, because the RBI don't spell that out to us. In fact, probably most regulators don't. But you know, that just lends itself to more and more rumours. So until, you know, Yes Bank management themselves come and say something about what they think or what the situation is, you know, you're going to be hostage to that. And that's where the problem lies, is that you're sat in this vacuum of not knowing, you know, what is right and what is wrong. So again, it's one of those things, you just sit on the sidelines, have your target price, and you know, see if anything is available at that time. But you know, I think sadly, you know, for one of the bigger banks, you know, there's just a lack of clarity, and that will spread it all along by itself.
Yep, fair point. Actually, let's move away from financials. You know, we have forgotten the older problem we had. We had a problem with macros, with crude, with rupee. And today crude is edging 80 and the rupee is 72, the dollar is 72.5 rupees. Andrew, how much can this scream off from the market? Do you see the Nifty getting supported at 11,000, 10,500? You know, at least is the downside protected?
So I think you're right. It's the macros which are scaring, and obviously, you know, crude at 80 is, with the rupee where it is the equivalent of, you know, 95, or, you know, we're getting towards that 100 level. And I'm sure if I would have asked you 6 months ago, Lata, what would you think the rupee or interest rates would be if the, you know, if the oil price was the equivalent of 100, and you'll be saying a lot worse than it is today. So I think, you know, interest rates are going to be continue to be pressured upwards in the very short term. I think the rupee is going to be pressured down in the short term, and that just causes its own kind of problems for India Inc. Will the government come in and step in? I think they probably will at some point, and that will probably be the point where the markets will then reassess of the actions they've taken, and whether that's going to help you know, stabilize the currency and interest rates in the short term. So if I was to have a guess of where the market would fall from here, I think there's probably another 5% fall on this basis, given what we have in the financial sector, given what you're seeing with the rupee, and given what you're seeing with crude prices. So, you know, that's a kind of perfect storm for markets to fall, actually. But the one thing I just want to say, Lata, is that, and I think it's not just an India thing, it's a global thing, is that we've all forgotten what pressures, you know, interest rates being hiked really means for companies with debt.
Yeah. No, that point is taken. You know, for the market, just keep an eye out on the mid-cap space. It's down more than 1%. I mean, it has been under pressure through the course of the morning, at least up until now. But a lot of fresh stocks getting added to the losers list. Motherson Sumi is down almost about 4% Cholamandalam is down about 4% Interglobe we spoke about earlier. Crompton Consumers has lost about 4%, so not looking good for the non-index large caps as well. Andrew, the only hiding place so far for investors has been IT. Through the course of the year, IT stocks have done well, and even this morning, TCS has hit a new high. You think there's still some money to be made here?
Well, you know, I think you know our strategy has been to hunker down in the last 3 months. It's not been something that's been you know, kind of helped us in the past few months, because it's been, I would say, less quality index stocks which have moved the Nifty higher. So that was also in itself a bit scary. But, you know, hunkering down meant, you know, keeping consumer goods, IT, and some of the private banks, and that's really where we've placed our bets, and, you know, raise the cash levels in the fund, you know, just to wait for this kind of, well, rainy day or stormy day, whichever you want to call it. So we're ready, but, you know, as I said, the problem is with so many rumours, and which are more negative than positive at the moment. It's worth just sitting back and just waiting for the dust to clear a little bit. As I said, you know, when regulators come and say we're going to calm the markets, it tells me that there's something they need to calm the markets for.
Okay. Last question then, Andrew. Is there anything that you are adding now on the short side since you have an AIF?
No, not really, Anuj, because it's, you know, you're seeing that anything can change, as we saw on Friday. So, you know, it's not worth, I think, kind of going aggressively short at this stage. I think we'll just keep our hedges high, which we have done anyway. So, you know, with a smaller amount of money being deployed, that's how we want to play. You see, I still worry about global factors as well, and one of the things that just, you know, concerns me, you know, we can talk about the US and everything else, but, you know, the Chinese market's down 25% this year. And I'm a great believer market tells you or knows something more than I do. So the economy is doing well. Nothing, you know, has changed for them, you know, apart from maybe trade wars, but even that has propelled the US market. So why not China? So there's something missing, I think, from the global trade. And the one thing about debt, which I want to mention again, is that I think most people have forgotten what short-term interest rates rising mean for problems in the debt markets. And the corporate debt market in the US, BBB, is $3 trillion. That's a scary number if things that start to unfold there.
Yes, it's not so big in India, and even then, look at the scare it has given in just a day to even the equity markets, not to speak of complete illiquidity in the debt markets last week. Well, let's see if all these statements make a difference at all. Thank you very much, Andrew Holland. Always a pleasure speaking with you.